China's DeepSeek AI just crashed Nvidia's stock and made it lose over $1 trillion. But the chart shows something even more dangerous. The same relative strength indicator signal that predicted over 60% crashes of Nvidia stock. But most traders are missing it. Today, I'll show you 3 special signals, including a critical support break, a double top formation, and the special relative strength indicator signal that predicted every major drop in Nvidia from 2007. Then we'll also analyze a bullish case to determine if you should buy this dip or sell. But before we begin, make sure to grab your free investment guide from the newsletter link below. You'll get my most profitable pattern that helped members make over 200% on Nvidia and 240% in SMCI. I have a weekly chart of Nvidia. We always want to have a weekly chart and a daily chart so that from the weekly chart we can see the bigger time frame, and on the daily chart is where we can know when we should get in, get out, and know what's happening day to day. So you always want to have those two if you want to be a successful investor. The first thing we should look at is earnings. For a good growth company, you want to see at least revenue growth of over 25% over the last 4 quarters. Here we see hundreds of percentages. So Nvidia is one of the best companies in the stock market, or it might be the best. If you look at the earnings per share, you like to see something about 40% for the last 4 quarters, and I'm talking about year-over-year growth. But Nvidia is blowing those numbers out of the water. Nvidia has hundreds of percentages. But there's one special signal which is actually quite scary. I'm going to go into it later on. Return on equity, we like to see something above 17%, but Nvidia has 91%, which is really, really high. But the bad sign that I'm seeing is that the earnings are decelerating. For growth companies, their stock price is always based on what they're going to be doing in the future. So when earnings are decelerating, normally that means that the growth of the company is reducing and it is reaching its peak and it can't grow any further. And that normally leads stocks to collapse. So we like to see it go from 30, 60, 70, then 100. But Nvidia is doing the opposite. It first did 1,000, then 700, then 600, then 170, then 110. And for growth stocks, whenever this start happening, they start to topple over. And then now we can go into the price action. So here we can see the nice cup and handle breaks out on volume. I let the subscribers know when it broke out here, and then we can see what happened. It went up on volume, very nice. From the first base, we can always expect at least 2 bases from such a very big breakout. So this is base 1, base 2. So a good investor would buy it here, double his position here, and then swing it to the end. And then they can sell here. Or if you're a very, very long-term investor, you just wait for it to close under the 30-week simple moving average. On the weekly chart, I have the 10-week and the 30-week simple moving average. So we see Nvidia went and it did this over 200, 180% run. But then now it's starting to show bearish signals. I already released 2 videos when I saw these signals. I know people have just started talking about DeepSeek, but the fact is that there are a lot of investors who are already selling the stock. And this is what I like about the stock market. You can see these things before they happen. One thing you should know as an investor is by the time you see the news, it's already late, because so many times there are cracks in the stock before the news comes out. You have to ask yourself, why were people selling before? That means these people knew something, because look at the price. From June 2024, the price really didn't go anywhere. So Nvidia has really not done anything for almost a whole year. So we see it struggling to go up on volume. So the price is going up on low volume, means less participants in the market. It's not a sell signal, but it's a bad signal, and we should get our eyes ready and start watching. So it comes, it pulls back, and I think it's gonna break out again. But that's not the case. What happens is that it forms something called a double top. This is a very strong signal and is a reversal pattern for stocks. So when stocks form a double top, they can normally reverse and then start going into a downtrend. On the weekly chart, we can see it comes up the first time. It is rejected on that price level around $150. It comes back again, and then it falls again. When we go to the daily chart, we can see that that support actually, was rejected several times. That's okay. We can let it just play around this consolidation area, and if it breaks out, we could buy it. It's not really a sell signal, but if you look at the signal I'm going to show you, then you would have known that, hey, something bad is really happening. So that's the first double top sign. We don't like that. And then we have 2 lines of support. We have this horizontal line and then this diagonal line. A trend line is validated when it touches at least 3 points. So we can see that these lines touch at least 3 points. And then we leave this We leave this flash out because this kind of spikes in action normally show that investors were just panicking, and it is not true price action. So we normally leave those spikes out when we are drawing these trend lines. So we draw that trend line, and we can see that when DeepSeek news was announced on Monday, we can see the stock crashed 17% and then broke that trend line on volume. If we put back the volume here, we can see that Nvidia crashed on very huge volume. This is also another bad sign. It crashes two trend lines, the horizontal and the vertical one. So decelerating earnings, double top, crashing a trend line on huge volume. These are already bearish signs. And then for long-term investors, if you want to get out of a stock, you sell when it's under the 30-week simple moving average and after it has broken support. So for long-term investors who got their stock, Nvidia stock, maybe around $17, this is the time to get out. That is just the truth. But how can you get out? I'm going to show you that later in the video so that you can try to get your money back. Because there's a special way that stocks fall. They don't just fall in a straight line, despite the fact that you might be scared right now. Now let's go into the last two signals, and the last one is the most scary. Here we see something called head and shoulders pattern. So this is a very strong reversal pattern and is normally the nail in the coffin. Whenever you see this signal, it normally means that the stock is going to consolidate for a while. How big is the crash going to be? I don't know in particular, but I don't think it's going to be a simple one. That's what I can say. Because if a stock goes up like this, it normally leaves a lot of price gaps, and that makes it just crash further. So we see this head and shoulders pattern, crashes down on volume, and that's another bearish sign. And then now the final sign, which I wanted to show you and teach you. In 2007, what are we seeing? You see this head and shoulders pattern? You know it, shoulder, head, shoulder. I don't know if you put our relative strength indicator, I'll show you the special signal. So a lot of people use the relative strength indicator, but they don't know how to use it. They use it to say that, hey, if a stock has reached 80, it's overvalued. Then if it's, if it's under 20, then it is undervalued. So does that mean that you're not going to buy here? Because it really never hit 20. Nvidia rarely hit 20. Maybe the time it hit 20 was around here, right? So you're going to miss out on all of these dips. And why you're not going to sell because it didn't hit 80, as you can see, that is quite interesting. So the fact is that if you want to use the relative strength indicator correctly, the first thing you have to know is that 60 level is one of the major levels. It can act as a support. It can act as a resistance. You can learn this from technical analysis from the trading professional. In addition to that, for your indicators you would like to add moving averages. So for me, I added a 13 and 33 simple moving averages to this relative strength indicator. So whenever it crosses from negative to bullish, and then it crosses and then comes and tests, that is a very good point to buy. So you can see it's around this point. So you could have gotten in Nvidia here. It happens a lot of the time. So see what happens here. It goes up, comes here, you can get in here. Same thing on the opposite side. If it crashes, wait for a return, or you can wait for it to come back. And then on that pullback, you can short when you see a good shorting signal. And then when you add the head and shoulders pattern here, you can know that, hey, this is a really bearish signal. So that 60 level is a good bearish indicator. And if we see it on the daily chart, let's see what happened. Head and shoulders pattern, very similar to what happened this week, crashes, and then does an 85% crash. Let's go to the next one, 2010. We don't have a head and shoulders pattern. This one is quite different this time. Look at the daily chart. It falls, comes back, fails on the 60 level, does a 54% crash. Let's look for where that happened again. You can see here, comes up, tests the 60 now, but on the upside, and then this is a very good buying point. So you could have gone in here, $0.8 for a true investor. You're not going to sell until you got 600% return on your money. But let's not look at the history. Let's focus on the future. Here we see price increasing, right? While the relative strength indicator consistently makes lower highs. This is a bearish signal, but it doesn't mean you should sell immediately. It is just a signal to say, hey, this is scary. But once you see it failing here on the 60 level, this is the last kick, forms a double top as we saw, something which is kind of similar to what we have today, forms this double top, 60 level. That's a very bearish sign, 60% drop, easy. All right, let's see what happened next. Here, 2022, crashes, we don't have the same one. Right? We don't have that head and shoulders pattern. I mean, maybe you could say this is the head and shoulders pattern here. Some people can claim that this is the head and shoulders pattern. Sometimes you see it, sometimes you don't. Yeah, you can claim this is the head and shoulders pattern. Yeah. Okay, maybe it is that. Okay, so we see that kind of reversal pattern. You can see the right shoulder comes, failed at the 60 level, 60% drop. And this is what is happening in Nvidia right now. So we can see the same very, very bad signal. I already released 2 videos about this, and I released them on January 6th. So that means that people were already selling the stock. It was already showing a bad signal. It was not really DeepSeek. DeepSeek was just the alarm, but there was already a lot of bad things going on. So if you're in the stock, if you don't have the stock, it's definitely not a buy from my side. If you do have the stock, I would say you really want to either sell your whole position. And the reason I don't want to be holding a position in Nvidia right now is because it closed under the 50-day simple moving average and it did not recover in price. The other stocks which were crushed did recover. Let's look at CLS. You see, it crashed and then recovered immediately. Nvidia did not do that. Nvidia crashed and has failed to recover over that line. So that's a bad sign. But a good thing is that stocks normally don't just crash just like that. They don't just fall. There's always hopeful people who think that the party is still going on, and then also there are hedge fund managers who want to dump their whole position. They just can't dump the stock. What they normally do is that they'll try to buy the stock, push it up a little bit to attract people to get interest into the stock, and once they've gathered enough interest, they can dump it on those new people. And that is what might happen in Nvidia. I have a strong feeling it's going to come back, 15% move up, and then it will finally crash, because such a big dog does not just fall down. It has to be knocked down several times. I hope you found value in this video. If you want to see more videos like this, subscribe to the channel, subscribe to the newsletter. The link is in the description, and may the markets be with you.